We've all heard of it multiple times, and perhaps some of you have probably had the pleasure of experiencing it firsthand. That very first 100x token that just makes your portfolio go ballistic. In the past year alone, we saw the meteoric rise of projects such as Mantra, which is trading at around 80x its price from 12 months ago. But finding those gems early on, well, that seems to be the hardest part. In this video, we will show you one way to spot early capital rotations so you can identify upcoming trends, discuss 3 of the hottest narratives of this year, and provide you with practical steps on how to find legitimate projects in each one of them. So let's get right into it. Before we continue, I'd just like to point out that nothing in this video is financial advice. It's purely educational content. Also, we have these videos every weekday, so if you're enjoying the content, please consider subscribing with the notification bell so you don't miss out on the next one. My name is George, and let's get back to the video. You know how the first and foremost rule in real estate is location, location, location? Well, in crypto, it's all about the narrative. Narratives, narratives, narratives. Essentially, this is the direction of where capital is flowing to. For example, just in the past 3 months, SUI is up by about 150%. This clearly indicates fresh funds are flowing into its ecosystem. So if we manage to identify the next hot narrative and pick a coin that fits the investor's criteria, well, you get the point. And what we have here is a very comprehensive report of A16Z, the leading crypto venture capital firm, and their analysis of the hottest trends in crypto this year. You've heard of the popular saying, to see the future, you have to know your history. So let's break down some of the trending niches and narratives and see where the market might be headed to next. The hardest part about identifying the next narrative is spotting capital rotations early on. And I'm not going to lie, this is tricky, and even the best traders don't always get it right. But there is one thing that we can look for. Also, check this chart. It will come in handy a little bit later when I explain what the steps to find projects are. Now, according to the research, stablecoins are one of the critical fields in crypto that have managed to find product market fit. A16Z says, and I quote, "By enabling fast, cheap, global payments among other uses, stablecoins have become one of crypto's most obvious killer apps." Indeed, the stablecoins market cap is nearing $200 billion, or about 10% of the total industry, and it just keeps growing. The report explains that stablecoin transaction value exceeded $8.5 trillion in the second quarter of 2024. This is more than double that of Visa for the same period. This is massive. Therefore, we can deduce that networks with a high stablecoin float would provide potentially more favorable conditions for users, traders, and investors. However, these networks also have to both be cheap and quick to ensure smooth user experience. Nobody wants to pay excessively high fees for transactions on a clunky chain that takes 5 minutes to finalize a transfer. The most logical conclusion is that high-speed chains that are also cost-effective and secure to work with will be prime candidates for flowing capital. We saw that with Solana back in the days, and we are seeing it with some layer 2s such as Base and some other layer 1 protocols such as SUI. What you can do is look for stablecoin volumes on reliable and quick networks to potentially spot capital rotations early on. If, for example, you see Tether announcing integrations on a new blockchain, that might be a cue to start paying more attention to its ecosystem. Remember this because this is very important to identify potentially good cryptocurrencies. Alright, now that we have this out of the way, let's check out the 3 top narratives in 2024 according to A16Z. Please note that this list doesn't rank the trends by popularity, nor is it exhaustive. Number 1 is infrastructure. And since the term infrastructure can be quite broad, we will narrow it down to one of its most trending subsections: decentralized physical infrastructure, or DePIN. We have a fully fledged guide on what is DePIN, as well as the top crypto projects in this field, and you can check it out. I will leave a link for it in the description below. Essentially though, DePIN refers to protocols that use blockchain technology to support a global network of physical infrastructure maintained by participants who provide the necessary computational resources. It's one of the relatively new narratives and one that is amongst the hottest categories in 2024 for builder activity, according to A16Z. Popular projects here are Render Network, The Graph, Filecoin, Arweave, BitTorrent, BitAnswer, and more. By the way, Render is trading at 3x its price from a year ago, having peaked at around 10x just a few months ago. This highlights the validity of the report. Moving on to narrative number 2, real-world assets. You guessed it. We also have a very comprehensive guide on this topic as well, and the link for it is down below. RWAs are digital tokens that represent physical or financial assets outside of the blockchain field. These can be real estate, commodities, bonds, equities, artwork, any kind of intellectual property, and much more for that matter. You will likely see the term tokenization tossed around quite a bit when it comes to RWAs. Most famously, the CEO of BlackRock, the world's largest asset manager, Larry Fink, said that tokenization is the direction to where the financial industry is headed to. Shortly after that, BlackRock launched a fund called BlackRock USD Institutional Digital Liquidity Fund in partnership with asset tokenization firm called Securitize. If the world's biggest asset managers are looking at it, well, perhaps it's a good idea to start paying attention. Leading projects by market cap in this field include names such as Mantra, Ondo Finance, Pendle, and more. Do you remember Mantra's ATX one-year performance? Last but not least, there's AI. The biggest buzzword of 2024 is artificial intelligence. At this point, it probably goes without saying that we have a guide on the subject and you know where to find it. AI coins, as they are commonly referred to, represent projects that have or are planning to incorporate artificial intelligence as some part of their functionality, framework, or roadmap. Ever since the big boom induced by the likes of OpenAI's ChatGPT and other applications, AI cryptocurrencies have gained massive traction. In fact, A16Z's report says that there is a major overlap between visitors to ChatGPT and visitors to top crypto websites. This indicates a strong tie between crypto and AI users. The report also says that crypto could solve some of AI's most pressing challenges, such as centralization. So it's perhaps safe to suggest that this trend isn't going anywhere. And now for the step-by-step process of pinpointing potentially promising projects in these narratives. Note that you can use these for pretty much any trend. Step number 1 would be to identify a secure, quick, and cheap network. My suggestion here would be to actually get involved in its community and test it out for yourself. If you enjoy the overall user experience, if the transactions are quick and cheap, the team is reputable and respected, and is actively working on improving the protocol, you have a good candidate on your hands. Step number 2 is to start monitoring stablecoin volumes. Note that you don't have to find a new blockchain per se. An established protocol with good history can also be a very solid choice. If stablecoin volumes start to increase, this means that capital is beginning to flow. You can use a range of different websites to track stablecoin volumes by chain. Tether even has a transparency page, which shows its circulating supply on all the chains it operates on. If the flows are already increasing, check out this chart, and I told you we would get back to it. This is how money tends to flow in crypto. For the purpose of this video, you can equate fiat to stablecoins and skip Bitcoin since you're looking for other coins anyways. Check out which tokens are performing well and cross-compare their market size to determine where in the cycle you're currently in. Step number 3, dive into the ecosystem and pin down projects in established narratives. We already listed 3 of these narratives, but there are many others such as DeFi infrastructure, lending, borrowing, and even meme coins. DeFi Llama has a great dashboard of projects by chain, and you can filter them by different criteria such as daily volumes, total value locked, and more. Look for projects with established reputation and a growing user base to reduce the risk. Alternatively, if you want to partake in a more risky scenario, you can look for projects with low market caps that are less known but hold value and good perspective. And lastly, step number 4 is to craft your investment strategy. Now, this is a long and very different topic from this video subject, so we'll address it some other time. However, good practices here include putting appropriate targets on when to enter and exit the market. you can once again refer to the stablecoin volumes as a reference point for when the market is cooling down and when it is heating up. So, to quickly recap. 1. Identify a secure, quick, and cheap network. It doesn't have to be a new one, it can be an existing protocol. Then, start monitoring stablecoin volumes. If the number goes up, start paying attention to its ecosystem and identify solid projects within established narratives. Last but not least, craft your investment strategy. To conclude, I'd like to point out that finding coins with potential is no joke. It requires understanding beyond following the herd because chances are that if it's out there, it's already too late. It requires time and effort to get involved with the respective ecosystems and to be able to spot potentially good projects immediately. Don't listen to anyone telling you that it's easy. If it were, everyone would do it. However, we're here to help you out with your cryptocurrency journey, and hopefully in time, it will become a lot easier for you to filter out the technicalities such as switching between networks, finding research resources, and so forth. And we're definitely looking forward to it. I'll catch you in the next one.